Joining me now with her trades is Victoria Greene, Chief Investment Officer at G Squared Private Wealth and a CNBC contributor. Victoria, Happy New Year. You like two of the dogs and sending one to the kennel?
Yeah, I did. Yeah, one of them's going to be banished outside. Don't touch it. But yeah, I think there's a lot of opportunity here. We're expecting value to do a little bit better. We think a flight to quality, good, strong cash flow is going to be a really good place to be in 2026. Midterm years typically have a lot of volatility. So one stock I don't think investors should overlook would be Verizon, right? The number one dog of the Dow, the highest yielding, almost 7% dividend yield, has done nothing for investors on the performance side, but a new CEO, right? I think Dan Schulman is great.
How do you play that, though? Because, I mean, he's coming in, slashing and whatnot, but that suggests that there's work to do, which could mean he finds further downside before he finds the upside, no?
I think investors are very forward-looking, and I think the combination with Frontier is great. There's like 29 million subscribers they're going to be able to cross-sell to. I think his focus is very much on how do we make incremental gains, how do we slow the churn, how do we provide and show the value to the consumers. They really feel like Verizon is providing such a great product, and they're doing a terrible job explaining to their customers why they should stay with Verizon. I do see a lot of hope there. I think investors might be optimistic. Obviously, they need to control churn and have some good net subscriber adds here in the Q4. We'll see that under the hood here in late January, but I also think they may be willing to give him a little bit of grace if he lays out his vision very well for where he wants to take the company.
Is there a carrier play in AI?
Well, AI should very much help them reduce headcount, right? AI should, and they've seen that. I think they're laying off about 1,300 people, and that will help them with cost control, which is a huge part. If Verizon can have better cost control, better customer service, nobody really enjoys interacting with their cell phone provider. Honestly, does anybody enjoy it when they have to go in and deal with a network problem or a phone problem or a bill problem? And so if they can improve their customer service without improving costs by utilizing AI, that could be a huge uptick for their overall gross margins.
Unless somebody's serving me yummy food in general, customer service is not something I look forward to. Okay, Merck, how do you feel about it?
I love Merck. I think they've got a fantastic pipeline. I know all of us know Keytruda is coming off. Their exclusivity ends in 2028. It's a huge cancer drug for them, but they have such a deep pipeline. There's a lot to like here. There's a 3.3% yield. It's only like a 13% or 13 times PE, and they've got about 80 things in their pipeline, like 80 solid phase 2, phase 3. They recently just bought and did an acquisition that's putting them in the flu prevention. And I know flu prevention, everybody's like, oh, whatever, we have our flu shot. It's a different flu shot. It's something that's actually long life. It does both A and B strains. It's a huge push for them. Massive $6 to $8 billion a year market for them. I love how forward this company is. I think we've got a lot of bad news out there. The HPV, the Gardasil, all of that is known. And if you look at their forward pipeline, and please don't make me pronounce any of those drugs because that gets a little bit difficult, but their actual pipeline is phenomenal when you look across both oncology, ophthalmology. They even play a little bit in animal health, which has grown 9% a year, even if it's only about 10% of revenues. A lot to like in a diversified pharma. And again, health is a good place I think investors want to be as you enter 2026.